Hey guys, we're back again here with my portfolio. Been a while since I've actually shown you guys it, but today we'll be going over the dividends I received in the month of August of 2019. And then we'll also be talking about some stocks that are on a discount here, as well as some stocks that raise their dividend, which is always super exciting to look at. So if you're new here, please consider subscribing to the channel. I put out personal finance videos a couple times a week, so you don't want to miss that. And as always, be sure to leave the like button, or hit that like button, of course. And let's get into it here. So I'm still beating the market actually in the past year at 4.43%. This is why I love being a stock picker. I know being a stock picker has been used in a derogatory way here in the last week by certain YouTubers, but you know, most people cannot beat the index, S&P 500 index that is. But, you know, this is why I like doing individual stocks, because I don't always like all the stocks that are just out there and all the companies. I don't always think that they have the best value or are in the best of businesses, and that's why I wouldn't want to invest in them. And that's why I prefer to do my own stock picking there. And based on what I've returned in the last year at 4.43%, that beats what the S&P 500 here VU is returning in the past year at 2.16%, and I also have a higher dividend yield overall as this S&P 500 index fund there has. So the true test is really seeing how long I can maintain that, right? It's easy to do it, you know, just for a couple weeks, but the true test is really to see if I can maintain that for long periods of time, and that's what's going to be tough, because I think the reason why my portfolio has been doing very well recently is just because it's more defense oriented. So it's been a lot of volatility in the stock market recently, so my stocks may perform a little bit better. But once we start seeing more growth here in the economy, that's when I think I'll really start to fade. So hopefully I'm wrong, but we'll just keep playing it in for the long run here. So first stock we'll be looking at here is JP Chase. Now, they actually raised their dividend here from 56 cents a share to 80 cents a share, which was a 42% increase in 2018. And then they just recently raised it again to 90 cents per share, which is another double-digit increase of 12.5%. I love seeing stocks raise their dividend like that, especially double digits year over year. So Chase, one of the biggest banks in the world, has been doing very well here in the last month, up almost 10%, which is pretty unreal. But this is a stock that's very volatile. I wouldn't be very surprised if JP Chase drops quite substantially in the next week, because it's very volatile to whatever is happening in the markets. Then we have Microsoft here at 139. This is another company that just recently raised its dividend. Of course, this is not a stock you buy because of its dividend. It's a very small percentage at only 1.5%. This is a stock you buy for its impressive growth, 193% in the past 5 years, guys. So Microsoft recently raised it another almost 11% from 46 cents a share to 51 cents a share. Obviously, that doesn't sound like too much, but if you owned, you know, a ridiculous amount of shares, that would be quite a considerable amount of money. And plus, your yield on cost always gets better the more you hold it and the larger the company raises its dividend every year by. And then we have two stocks on sale here. So McDonald's, I bought it around the 218 mark. I saw it's down almost 4.5% here, so went ahead and picked up another share of it. Obviously, think it's a great company for the long run. Its 5-year chart is just amazing, 122% return. This is a company that does well even in recessions. Then we have Starbucks, another stock that's very rare to see have down days, up 136% in the last 5 years. But in the last month, it's down 6.63%. So I have not bought another share recently, but have been thinking about buying another one if it maintains at these levels. Also, guys, I've recently made some videos on Target. This is another stock that has actually doubled its total value within the last couple of years, which is absolutely crazy. So I have a video out on that, so be sure to check that out where I do a full stock analysis on Target. And then I also recently made a video about how I save nearly 70% of my income. So if you want the details on that, be sure to check out those videos. Now let's get into the dividends I received in the month of August 2019. Okay, so starting off with, we have the company of General Mills. I only own 2 shares of them, and they pay out 49 cents per share. They're pretty slow at raising their dividend. It's usually only a couple pennies a year, but hey, they're a very reliable company. Breakfast cereals and all that good stuff. Yeah, can't wait to see their improved growth for as long as I hold it. Then we have AT&T, a very popular stock among this dividend investing community here, at 51 cents per share. Also another company that doesn't really raise it by a substantial amount, but AT&T has a ridiculous starting yield. It's well in the 6%. When AT&T was down this year, you could have had a starting yield that was in the 7%, which is absolutely crazy for a world-class company like AT&T. Very boring business model, but that's exactly what you want, and that's exactly what the next company, Verizon, has as well. Also just barely raising its dividend year over year. Both of these are dividend aristocrats, or at least getting there. Verizon only own 2 shares as well, but pays out a very high dividend percentage. And then we have MasterCard. Now this is a company that you buy because of the growth, not necessarily because of the dividend. I actually think I own 3 shares now, but at the time I only owned 2. So that's why I only got paid out for 2 shares of owning it, because I didn't buy it before the ex-dividend date. And for the foreseeable future, I expect substantial growth from MasterCard in terms of capital appreciation. And then on the cherry on top is also receiving that dividend, which they have plenty of money to be doing so in terms of raising it. I think its payout ratio is somewhere close to like 20%, so definitely lots of room to grow that for the foreseeable future. Then we have AbbVie. Actually picked up another share of this, so next time I'll be getting paid for 4 shares. This has a very ridiculous dividend yield as well, close to 7%. This has actually been one of my biggest losers inside my portfolio, just because I bought it kind of at the worst possible time, at its all-time highs, and then it's just rocketed in the downward direction ever since, really. But it's very nice to receive this dividend every quarter. And then we have Procter & Gamble. I also have a video out on this as well. This is a dividend king, actually. 50 plus years of dividend increases. Procter & Gamble, very recession-proof stock as well. Definitely feel comfortable owning this in the long run. We have I'll probably mispronounce how I always pronounce this, Realty Income, not Reality. This is a monthly paying dividend stock at 22 cents per share. I actually heard another YouTuber, believe it or not, they were going over their dividends and they actually pronounced Realty Income the same way I always pronounced it, Reality. So glad to know that I'm not the only one who says it like that. Then we have Apple. Of course, those iPhone just recently came out, the newest version of it. 77 cents a share. You buy this stock, again, not for its dividend, but for its capital appreciation. Very stable company there. Then we have Starbucks at 108. And then we have one of the few ETFs I own, BlackRock Science Technology. This is another monthly dividend payer at 45 cents total, 15 cents per share. Then we have SPHD at 46 cents. This is also another monthly dividend payer, high dividend and low volatility ETF. So that's going to really do it for the dividends I received in the month of August. So again, obviously the income isn't huge here. In August of 2019, I only made $16.63. My dividends are typically on the lower end on this sort of sequence. It's really bigger on the March, June, September, December period. That's when I really get the bulk of my dividends. So in August 2019, I made $16.63. And in August of 2018, I made $8.49. So that's actually a 95.88% year-over-year increase. So I'm really excited to see what August of 2020 brings, because I'm hoping that it'll increase by double yet again. And that's really the beauty of dividend investing, is all the compounding and just seeing all your dividends just go in that upward direction as companies just continue to raise their dividend, as well as you just buying more shares of dividends as well. So that's really the how you get rich with dividends. It's definitely not a sprint. It's going at a slow pace, and we'll see what next month brings us. As always, guys, if you like this content, please let me know, and be sure to subscribe to the channel.